Hey everyone, I'm Shannon Terrell, Senior Writer for Finder.com's share trading and investing channel. And today I'm here to give you the lowdown on DiDi Chuxing's IPO, including why investors are excited, risks before you buy in, and how to actually go about purchasing this stock once it goes live. Let's get started. Information on IPOs often trickles in, but here's what we have on the DiDi listing so far. DiDi Chuxing is a Chinese ride-hailing platform that's headquartered in Beijing. It's one of the most popular ride-hailing platforms in China. So popular, in fact, that in 2016, DiDi acquired Uber China. No small feat when you consider Uber's prevalence in the industry. DiDi is available in 4,000 cities across 15 countries that include Mexico and Japan. The company reportedly employs about 15 million drivers with over 493 million annual active users. DiDi Chuxing shares will be available to U.S. investors as American Depository Receipts, or ADRs. What's an ADR? It's essentially a tradable security that represents a slice of ownership in a foreign stock. ADRs let international companies sell stock to U.S. investors. What's important to note here is that the process of buying and selling these securities is a little different than the traditional trading process, but I'll get into that later in the video. DiDi Chuxing's ADR offering will go live on the NASDAQ and the New York Stock Exchange under the ticker symbol DIDI. The deal is being underwritten by Goldman Sachs, Morgan Stanley, and JP Morgan, among others. Now, is the stock a buy? Well, the company's financials may help you decide. The Wall Street Journal reports that DiDi could be targeting a whopping valuation of $70 billion. In fact, it may be one of the biggest tech IPOs of the year. And as far as the company's financials are concerned, DiDi appears to have rebounded from pandemic lows to enjoy a profitable quarter. For the 3 months leading up to March 31st, 2021, DiDi Chuxing reported $6.4 billion in revenue with a net income of $837 million. In 2020, the company reported $21.6 billion in revenue with a net loss of $1.6 billion. Now, a profitable quarter is promising, but it doesn't necessarily indicate a trend. Before you invest, take some time to dig into DiDi's financial history and performance and decide whether this stock is a practical fit for your portfolio. Performance data is helpful, but there are a few additional factors to consider. You'll also want to weigh the stock's potential pros and cons. Why invest in DiDi Chuxing? Well, like any newly minted stock, there is an opportunity for profit. Plus, DiDi is backed by the likes of Alibaba, SoftBank, and Tencent, and the support of these major players in the Chinese market could be interpreted as a promising signal for investors. DiDi may also act as a diversifying agent in your portfolio, since this Beijing-based business won't be vulnerable to the same market-impacting events that affect American companies, like national politics, interest rate fluctuations, or unemployment trends. That said, no investment is foolproof. Because DiDi Chuxing stock is only available as an ADR, it poses a risk. ADRs tend to have less liquidity than stocks from US companies, which means you may not be able to buy and sell them as freely as you would a normal stock from a US company. Another concern is the fact that ADRs, while priced in US dollars, are still vulnerable to exchange rate fluctuations. So both the stock market and the Forex market could potentially affect the value of your shares. We've covered the hype, we've covered the pros, we've covered the cons. Now, how do you actually go about buying the thing? Well, there are a few different ways to go about purchasing DiDi Chuxing shares. The first way to buy into DiDi Chuxing is by purchasing ADRs through a domestic brokerage account. Here's a look at the process on the Robinhood app. First, find DiDi Chuxing. Sign into your all-in account and search for DiDi Chuxing by name or ticker symbol, DIDI. Next, select your order type. A market order will execute your order right away at the current market price, and a limit order delays your purchase until the stock hits your desired price. Next, select the number of shares. Make sure you have enough money in your account to complete the trade. Finally, review and submit. When you're ready, swipe up on the screen to submit your order. Another way to add DiDi Chuxing to your portfolio is through an exchange-traded fund that tracks the stock. Keep an eye on the following ETFs that track Chinese stocks. These may be your best bet for investing in DiDi once it goes live. The iShares MSCI China ETF, CraneShares CSI China Internet ETF, Renaissance Capital's International IPO ETF, and finally the SPDR S&P China ETF. And finally, if you are determined to purchase DiDi Chuxing directly, you can open an international brokerage account. Most US brokerages offer access to the New York Stock Exchange and the NASDAQ only, but there are a few that are set up to offer access to foreign exchanges, including Charles Schwab, Fidelity, and Interactive Brokers. Before you open an account, review each broker's fees, features, and investor feedback to help find the account that best suits your budget and your investment goals. DiDi Chuxing is getting its fair share of hype, but hype alone doesn't necessarily make for a smart investment. Research and carefully vet the company before you buy. Prior to launch, keep an ear out for any big market impacting events, like newly introduced legislature or shifting tariffs. And for more on this IPO, you can check out our DiDi Chuxing page at finder.com. We'll update it in the lead up to its launch. If you liked this video, don't forget to hit the subscribe button so that you'll be the first to know when new Finder videos drop. Thanks for watching.